to the stock debate and stock debate question of the day. Adani Power has bought Avantha Group's Korba project for 4,200 crore rupees. Will you buy Crompton Greaves on hopes of a debt reduction in that company? Joining us for this discussion, MAYURESH, JOSHI and AMBRAESH, BALIGA. But before we get to our guests, let's get Pragya BHARDWAJ to wrap up for us what exactly this development means for the company. Pragya.
Well, Menika, Avantha Group's board, it seems, has been very busy. There's been a lot of news flow from the company over the weekend. The first one, of course, as you highlighted, that Adani Power will buy the 100% stake in Korba plant, which is based out of Chhattisgarh at an enterprise value of 4,200 crores. Since this is an unlisted company, we don't have details on what is the kind of equity component or the debt component. So difficult to say if it's a good deal or a bad deal. But this is for installed capacity of 600 megawatt. The company is implementing another 600 megawatt in phase 2. This will be the second major acquisition which is done by Adani Power ever since they bought that UDP plant from Lanco at roughly about 6,000 crores. It will be interesting to see how they can fund this acquisition given their own debt equity and other leverage issues. But of course, this remains a value unlocking exercise on account of Crompton Greaves as well, which is one of the marquee companies within the group of Avantha, given the fact that Crompton Greaves, as we now understand, holds roughly about 23% stake in Avantha Power. Additionally, in another news, this is what we're picking up from media articles, that another of their projects, which is the Chabua Power project, that could go to a consortium of Tata Power and ICICI Venture, wherein the entire funding has to be taken care of by ICICI Venture, and of course Tata Power will have to take care of the running of the plant. So interesting business line that is developing for Tata Power as well. Again, this deal on both of these power plants could be to provide a partial exit to KKR, who had invested close to about $125 million in the company. The second news, which is the more important news, which is probably why we've seen that stock reaction today, is the unlocking of the value wherein the company is demerging its consumer products business into a separate entity. Of course, this commands a much higher multiple, has been the value growth driver for the company for a long time. Therein what we understand, and this is what's been reported in the media articles, and today confirmed to a certain extent into what came out in the exchange, that Avantha Holdings, which is the promoter company in Crompton Greaves, will sell their partial stake in the consumer products business as and when that gets listed. Now, we don't have the final details of what comes by, but just to put things into perspective, Crompton Greaves, the listed entity, holds 25%, will hold 25% in the consumer products business. If you go by that, then Avantha Holdings, which is the promoter company, will continue to hold 32%. This is just a vertical, reflection of the way the companies are structured right now. What media articles have been talking about is Gautam Thapar was looking to bring this stake down to 25% and then sell this off eventually to some of the names doing the rounds were Hitachi, Havels, etc. So, all of those have been denied by all of the parties at various points of time in the past. So we have to see who this gets sold to, but this will be a very important value unlocking exercise. The company has debt at the holding level, not at the Crompton Greaves level, so that's definitely not an issue. Those were the two important news flows. The company has been doing a lot of value unlocking exercise, including the sale of land that we saw in Kanjarmarg. That is just putting and summing up all of the news that came in.
Hey, Pragya, I want to ask a very brief question to you. Yeah. So, what drives the premise that the sale of this power plant will mean a reduction of debt at the Crompton Greaves level? So can you talk us through why you think that Crompton Greaves stands to benefit either from the sale of the power plant or the demerger of the business, unless CG is able to sell its stake in that consumer business?
Well, Crompton Greaves, the listed entity, has two separate business verticals. One is the consumer business, which is primarily domestic. The other is the industrial segment. Therein, they had done some acquisitions, and the restructuring had meant taking some one-time hits, some cash losses. So that is still to turn around for the company. The money that comes in from there, and this would drive better valuations, better multiples, something that the company has been speaking about for quite some time now. So this is more in line with the company's strategy rather than to just tackle on the debt situation. They want to drive separate business verticals and drive better value for both of those business verticals. I mean, that is coming more from a strategy perspective rather than to tackle with the debt. The debt equity of Crompton Greaves continues to remain stable. Only thing to note is that the debt that they have is on Avantha Power's books, which is an unlisted subsidiary. Exactly difficult to quantify the amount because, I've been going through
Crompton Greaves, right?
Yeah, no. It just has a 23% stake in one of the power plants, which would be at the SPV level. So difficult to say if it is at Avantha Power level or the SPV level and what would be the final figure be. So I won't say that this exercise is so much to bring down the debt, than it is.
So essentially what we're saying is just the trigger of separating out the consumer business and potentially selling stake in it, right?
Right.
Okay, fine. That's something that we had an idea about, Ambrish. It's not like it's new news, but there has been progress on it now.
Yes.
What does it mean for your outlook on Crompton Greaves?
Crompton Greaves, in fact, I've been quite positive on this stock for the last 1 year or so, at the levels of about 120. After a good run to levels of about 225, 230, I'd asked people to book out to a certain extent. And then in the last 4-5 months, we have seen it correcting sideways. Now with all this news flows, I think it's again time to start buying it. Because whatever said and done, when you have this demerger of a CG consumer, clearly 1 plus 1 doesn't become 2. It becomes more than 2. So there is value addition. Sale of Avantha Power also is positive for them. They have an investment of about 225 crores in this company. So, I really don't know as to how much they'll finally get. I don't know whether they'll get 500 or 800. I really don't have a figure. But, it is surely positive for Crompton Greaves. But at the same time, let me also tell you that I don't think this value is great as such, because they have sold it at less than 4 crores.
You're talking about the power plant
sale. Because 4,200 for 1,200 megawatts is quite cheap. Because recently there was another
how does
deal.
it impact the Crompton Greaves stock, given that it's not necessarily, a big change for them in any fashion, right?
No, because see, they have an investment of about 225 crores. So 225 crores could become 400 crores, 500 crores. I really don't know as to what sort of a return they'll get from this investment, because they have an investment of 225 crores.
In the power plant?
In the power plant.
Yeah, but so they'll get that back, right? Or a little bit more than that, depending on what the breakup is.
Absolutely. So I really don't know what that figure is. Surely they'll get 225 crores back. But it could be 400 crores, it could be 500 crores. I really don't know as to what the figure is. I think that only the company should be able to tell you.
Okay. Senthil?
Yeah, Mayuresh, clearly Crompton is extremely serious about unlocking value. As Pragya told us, it's been selling its land parcels, it's been selling, it's demerging, its consumer business has just done the sale on the power plant. Is there anything else it can do to unlock value, and how are you looking at the share at this price?
Afternoon, Senthil. I think clearly we have been positive on Crompton Greaves for some amount of time. And again, our target was based earlier at 230, based on assumptions of the consumer business probably getting unlocked, demerged, and probably doing well. Again, I think the news of the power business sell-off will be very difficult to quantify the kind of debt that can actually come down, because I think it's very difficult to understand the 23% stake, as Pragya was mentioning, in the SPV that they hold. So the kind of enterprise value that is probably derived, what goes towards the P investor, what goes towards debt reduction, what goes to the minority shareholders, and what finally remains probably with the Avantha group is something to be seen over a period of time once the company discloses it. But clearly I think the consumer business is the business which will drive the consolidated revenues of Crompton going ahead. The take that the management probably has in terms of the top line is around 6,000 crores that they expect to achieve, and EBITDA margins of 14%. Now our take is that if you divide the EPS that we're expecting of around 10.2 rupees, and you just simply divide that around 5 rupees for the power business, 5.2 rupees for the consumer business. And if I just do a simple comparison with Havells, its nearest competitor, probably in the fan segment, lighting segment, luminaire segment, pump segment, I think Havells derives a valuation of around 27 times FY 16 estimates. If I assume the same valuations probably for the consumer business of Crompton, the stock should be priced at least on the consumer part at around 125, 130 rupees. And again, I think the power business is doing reasonably better, I think, with the industrial EBITDA margins probably inching up because of better orders coming through and better quality orders with good margins. Probably I think the EBITDA margins of industrial segment and the power grid tendering would take the EBITDA margins of the power business up as well. So I think the company is very, very hopeful of improving its top line on the power business as well. So again, I think it's a positive for the stock. I think very difficult to quantify, as I'm saying, the net debt around 1357 odd crores on Crompton books, but that can be got down from the sale of the power business in which it holds a partial stake. But clearly I think the other drivers are very much in place for Crompton Greaves, and we still maintain a target price of 235 on the stock.
Okay, so clearly the buy for you, both you and for Ambrish. Ambrish, you mentioned that you were slightly disappointed by the price they got.
Right.
Now, what does this mean for others looking to sell power assets? You've got JP Power, for instance. Here's the deal that's gone through at a price that's slightly lower than what you think is fair.
Absolutely.
What does it mean for JP Power? Because does it make it even more difficult? Because now you've got Adani, they picked up this. Will they be in the market for... So are buyers going to, not dry up, but buyers going to slow down?
And just one addition to Senthil's question. I think it's 4,200 crores for 600 megawatts, not 1,200 megawatts. The power plant has the ability to expand to 600 megawatts.
That's true.
Yeah. So it can add on another 600 megawatts, but currently the capacity is 600 megawatts.
Yeah, but then I don't know whether the valuation was meant for 1,200 or 600. I'm assuming it is 1,200.
I think the impression that even Pragya is insisting on is that it was for 600.
It cannot be for 600 because if it is 600, then we are talking of nearly 6.5 crores, which is very, very expensive.
Okay.
Because as a thumb rule, it has to be anywhere between 4 and 5 crores.
So it would be 600 plus the potential of being able to increase to another 600.
Yes.
Yeah.
So we actually need to see as to what the valuation is, but it seems slightly on the lower side.
Okay, sorry. Senthil's question.
Lanco was, I think, at about 5 crores or so. But then whatever said and done, I think most of the power plants usually sold now, I think would be more at distressed sort of valuations than the real valuation. And when it comes to JP, I think the power plants which they will be selling even going ahead would be at levels lower than, I think, 4.5 crores.
Okay. You know, besides the point that Senthil made saying, will there be enough buyers out there, you know, for assets of this nature, the stock in itself, Crompton Greaves, is up some 60% for the year. Don't you think that the appreciation already factors in the potential sale of a power plant, the lightening of debt, therefore, at Avantha power level, and therefore, you know, the subsequent good benefit for Crompton Greaves, at least up to 23% of equity? Equally, the demerging of its consumer business has been talked about. So isn't much of this already factored in?
I mean, I don't think most of it is factored in, because when you finally have the demerger and the shares are allotted to the shareholders and it gets listed on the like in the markets, that is the time you'll actually see the unlocking. Because right now it's quoting at about 20 times FY16, and when you have the demerger happening, those shares will actually quote at anywhere between 25 to 30 times. So that
based on competitive valuations, is it?
Yeah.
Okay. So you're expecting that the stock will continue to move up and in fact with increased momentum from here on?
It can move to levels of about 235, 240. I'm not saying that from these levels it will become 300.
Okay. Mayuresh, you said it was a buy as well in response to Senthil's question. What kind of price appreciation can an investor expect from here on for Crompton Greaves?
Clearly, as I mentioned, I think on a consolidated basis, we're expecting an EPS of around 10.2. So, at the current valuation, as Ambrish was mentioning, at 20 times, our expectation is that the stock should at least quote at 22.5, 23 times forward earnings, based on the value unlock that investors will receive from its consumer business and the parallels that we draw with Havells. So, clearly, I think our target price remains at 235 over the next 12 months. So, another 30 rupees up from the current levels, probably.
All right, gentlemen, stay with us. We're done discussing Crompton Greaves.